Ben?
So thanks for coming today. I'm Kevin Lurie. I'm from Progressive Benefits. I've actually worked with NRP forever. I started out of a little house in Avon with 5 people. I've kind of grown with the company, so I'm excited to be here still, and I appreciate your time today. When we looked at the benefit plan, we look at our benefit plan every year. We've had the core plan, our $500 deductible PPO plan, for a really, really long time. And the goal has always been is to provide the best coverage for you guys and really make it a benefit for you versus just offering coverage. And last year we made some changes for people who really wanted to pay less and didn't care about the coverage and meet some of the Affordable Care rules. But our core plan's still always been that $500 deductible plan. So this year, as we explored more in depth and we really looked at where we were at, we realized that everyone's needs are still different, and that we could add an HSA plan, a health savings account plan, to the portfolio at NRP and potentially give a better plan to certain people, allow people to keep their other plan if that's what fits them better, and just meet more goals, meet more opportunities for the people in the plan. So my company, Progressive Benefits, has had the HSA plan for, 5 to 8 years right now. And the reason we signed up for it originally is I wanted to make sure when I did these meetings and you guys asked the questions, I knew the answers and I had actually experienced how the HSA worked. And the HSA plan for the right person is an awesome plan. And I need to say that one more time because it's for the right person. So when we do these meetings and we can see everyone and you're electing a plan, we tell you don't cheat off the person next to you because your needs may be different. And we're going to be pretty specific on the 2 plans that we're really talking about today. I want to make it clear, there's no difference to NRP which plan you elect. It makes no difference. The plans have been set up to give people the exact same structure, whether they take the $500 plan or they take the HSA plan. So Amy, if we move forward, I might be talking foreign to some of the people. I'm not sure how many people here know what an HSA plan is. You guys know? Good. So we don't really know. So when we look at it, there's some acronyms we're going to talk about. The HSA is a health savings account. The HDHP is your high deductible health plan. So these plans themselves are kind of used interchangeably. You can't have the savings account, the health savings account, unless you have a high deductible health plan. Okay? So it may not be clear, but the high deductible health plan clearly has a high deductible, and in the HSA world, you're not allowed to have any co-payments in there. That's the structure of the plan. You may say, why? That makes no sense. The government set it up. It structured the rules. So anything within this is non-negotiable. Like, it's not like NRP could have changed it or moved it or done anything differently. The benefit plan is what it is. So we're going to talk about the HSA plan and the high deductible health plan kind of together, but the HSA is your health savings account, and that's where you're able to put away tax advantage dollars into an account, and it has to be, once again, in conjunction with a high deductible health plan. The HSA account, which is like a checking account, if you want to put a picture to it, or an IRA account, so you guys own those accounts. You'll have a credit card for them. You can have a check for them. You can really do whatever you want. NRP is going to pick up the fees for those accounts, so you don't really need to worry about it. The HSA medical plan that we're going to talk about is going to have a $2,600 deductible versus your $500 deductible. So you do have your medical plan, which is your high deductible, and you also have your savings account. And the reason that this makes sense, which I probably should have mentioned, you kind of win on the tax dollars on this plan. So if you're really, really healthy, if you're really, really sick, or if you're going to fund the account, it could really work out great for you. If you don't have any of those 3, if you're a moderate user with a lot of prescription usage, it could work out worse for you. So you do need to explore what happens within the HSA plan and how it fits you, and where it works out.
Does that mean that the PPO 500 can't add to the HSA?
Yes.
Okay.
So, can they ever there? So the question was, can you have the HSA account on the $500 deductible plan? And you absolutely cannot. So you could have the FSA plan, flexible spending account, with the $500 deductible.
Okay.
And you can have the HSA account on the high deductible.
Okay.
Slightly confusing, and I know that, and that's why we're doing the meeting.
Okay.
So if you have more questions, just jump in because it does make the meetings more interesting. So the funds in the HSA account are just like your FSA account. They can be used for health deductibles. They can be used for other medical expenses, for dental, vision, prescription drugs. There's a whole variety of things that you can use with the HSA account. And we go to the next one.
That's the same as pretty much the FSA, right? You can use it for the same thing?
Yes. Okay. So the question was, can you use those dollars for the same thing? And that answer is absolutely yes. The difference falls in is with the FSA plan, it's really, really regimented. So when you guys do your FSA plan, which is a marvelous benefit if you have the $500 deductible. But here's the advantage. When you do the FSA plan, you're picking at the beginning of the year how many dollars are going in there. And it's going to come out that amount for 12 months. And there's a small carry forward right now. There used to be a use it or lose it. But you're really limited. I think it's $2,500 this year. $2,550 this year. So the HSA account for 2016, and I think we have this published somewhere. If you're a single, you can put in $3,350, and if you're a family, you could put in $6,750. If you don't use any of those dollars or partially use those dollars, they carry forward to next year. So you never lose those dollars. And they're owned by you. So that HSA account, like your checking account, you own that account. The company has no way to tell what's in there, what you're using it for. It's your account. So the dollars that are in there, you own, and you can do with what you want.
Do you need to keep selecting HSA every year in order to use those dollars?
No. So you need to select HSA to keep funding those dollars.
Okay.
It may be that the HSA plan is not right for you every year.
Right.
Or you may say, it is right for me this year. So if you look at the big picture, I don't want to jump too much, so maybe I should come back to it, but I'm going to give you some examples of where it works and where it may not work, so that you can see that there's certain years that the HSA may totally work for you. And there's other years you may be like, I think I'm going to go the other way. But the funding of the accounts, if you think about it, you can use it for your deductible, so now you're paying everything tax-free because the dollar goes in tax-free and out tax-free. You can also use it for dental. So if you have little kids, then orthodontia is going to cost you $3,000 or $4,000, and the dentist is going to give you a discount if you pay all up front, and you have money in that account, and those dollars went in tax-free and out tax-free. You just save like 40% or 30% of those braces based on using the HSA. So you guys own the HSA account. It's not a use it or lose it. The dollars have gone in tax-free. I mean, it does help you for planning, and if it ever works out, which it never does, you have way too many dollars in there, you can use them for retirement after age 65, pulling them out just like you would in a 401k. And with the HSA that NRP selected as the carrier for that, once you have dollars in there above $2,000, you can actually invest those dollars in mutual funds, which there's a selected variety, which are actually really, really good funds.
And you said the deductible is $2,600 on this?
Yes. Okay. But don't jump on that yet. I don't want to mess up my slides. But there's more to that.
Spoiler alert.
Amy, you ready for the next one?
I am.
Let's go one further because we kind of talked about this page already. Oh, this may be her section.
So what we're going to talk about here is how the actual enrollment of the plan works. So in order to take advantage of the HSA bank account, the IRS says that you do need to be enrolled in a high deductible health plan. And so during the enrollment period, when you go onto the NRP open enrollment site, you do want to elect the high deductible medical plan, and when you do that, you'll then be able to put money in on a pre-tax basis into that HSA bank account. And again, all of these limits, so the definition of what is a high deductible health plan and what are the maximum contribution limits, those are all set by the IRS. That isn't anything that NRP gets to decide or anything that Progressive or even Cigna gets to decide. So that all is governed by the IRS. And when you look at the different allowable and non-allowable expenses, we do have a flyer that will be out on the HR site, again, with open enrollment documents, but you can also access that information through the banking. The HSA banking is through a company called TASC, T-A-S-C, and they have a lot of information available from the eligible and ineligible expenses out on their website. So when you choose to make payroll elections into your HSA bank account, they can be done through an automated payroll deduction. And so all you would need to do is when you enroll is you would need to let your payroll department know what amount you want withheld on a pre-tax basis. One of the easiest ways to do that is in a few slides, we'll show you the contribution savings between the health savings account with high deductible health plan and the $500 PPO plan. And even if you just took that dollar amount and put it into the HSA, your contributions wouldn't change at all, but you would have some pre-tax money going into your HSA account. But again, remember that you can contribute up to that maximum amount. And then accessing your funds.
Amy, I'm sorry to interrupt your thing. So the amount you contribute is also flexible. So with your FSA that we've had for a long time, you actually define the amount you want, and that amount comes out of your paycheck for 12 months. With the HSA, that number is flexible. So you may say, I want to fund X amount, and then you realize you have a really big expense coming, and you can actually change it, put more in, less in, you can put a lump sum in. You have total flexibility in an HSA account versus the FSA, which once again is a wonderful vehicle, but it's much more regimented. I'm sorry, go on.
No, that's a very good point. Another point to reference with the HSA is that the funds aren't available until they've been deposited in your account. So the flex spending plan, anybody who's used that before, you know that on the medical side of it, you've got access to the full contribution amount from day one. On the HSA plan, it's a little different because it's not as regimented as the flex spending, and because it's a use it or save it as opposed to a use it or lose it. You only have access to the funds after they've been contributed into your HSA bank account. And then once you have the funds in there, you can use them either through your HSA debit card, or you can request a transfer. So if you want to pay out of your own checking account, you can then pay yourself back through a transfer from your HSA account to your own checking account.
And you can't layer the HSA and the FSA, right?
So that's a good question, and the answer really is yes, because you can use it for your child care with the FSA and limited distribution for things that aren't covered by the HSA, but a lot of times people aren't really funding. Besides, so the daycare falls in, which is a great benefit. But at some point, if you're funding $6,000 or whatever amount of dollars, so if you're a family and it's $6,750, most people aren't putting in much more than that. But yes, you can actually do it, but there are some rules attached to that.
Right. And again, those are IRS rules.
We have something posted also on our intranet that goes over that. So basically, if you're combining the two, the FSA, you're limited to vision and dental expenses if you're also doing the HSA. But I can give you more information on that.
And the child care.
Right, and dependent care.
Okay, so we talked a minute ago about making contributions on a pre-tax basis through payroll contributions. The IRS does allow for after-tax contributions, so if it gets to be the end of the year and you don't have time to make a payroll contribution, but you still have an amount left that you can make without exceeding that maximum contribution, the IRS does allow you to make after-tax contributions, and then when you file your taxes for that tax year, you would just make note of that after-tax contribution, and you would take the tax savings at that time that you file your taxes. So the easiest way is going to be through pre-tax payroll deductions, but there is the allowance for after-tax contributions. You just have to remember when you do that, that you have to allow for it and account for it, rather, when you file your taxes later in the year. All right, so some of the service features that are available through Task for your HSA bank account. The online enrollment is going to be very simple. The only enrollment selection you have to make is into the high deductible health plan, and then what will happen is automatically a file feed will be sent from NRP. So anybody during the open enrollment process who selects the high deductible health plan for medical will automatically be sent to Task to have an HSA bank account open. So that's the only election, again, that you need to make is in the NRP open enrollment section. And when you do that, you'll receive an email or a mailer to your home address with access to your online Task bank account. So it will be a username and a temporary password, and then once you go into the website for the first time, you'll be asked to reset your password so that it's something only you know, but then you'll be able to access the web portals, you'll be able to order additional debit cards if you need them, you'll be able to fully manage your HSA bank account through that website with Task. So you'll also receive a debit card. Everybody will receive one debit card. If you would like additional, you can order those through the web or you can call Task at the customer service line. And when you go to the doctor, as long as you have money in your HSA bank account, you can use your debit card to pay for expenses. A rule of thumb, though, however, I would like to caution everybody, when you go to the doctor for a visit, ask the doctor, don't pay for the visit right then and there. Wait until the physician submits the claim to Cigna. Cigna will process the claim with a network discount, and then once the claim has been processed and you know truly what your amount that's due is, then you can use your debit card to pay that bill. So don't pay at the time of service again, because they're going to want to submit the claim to Cigna. Cigna will process a network discount, and then you can pay the balance from your HSA bank account. When you go to the pharmacy, again, as long as you have money in your HSA bank account, pharmacy claims are point of sale, which means that the claim is processed right then through Cigna. So when you go to the pharmacy and the pharmacist, make sure to hand them your Cigna medical card. Medical and pharmacy is on one card, and what that allows the pharmacy to do is when they process your prescription, they're sending that directly to Cigna, number one, for the claim to be filed so that we can keep track of your deductible amount, because on the high deductible health plan, it truly is one of the easiest medical plans to understand, because everything except for preventive care is paid at 100%, there's no deductible, but everything else, all medical and pharmacy expenses are subject to that $2,600 individual or $5,200 family deductible, and then the plan pays 100%. So as long as you use your Cigna card when you go to the pharmacy, that claim is automatically being submitted to Cigna. So not only will Cigna apply a discount, but will also calculate that deductible and keep track of it. And then the balance on that pharmacy claim, you can use your HSA debit card to pay for that claim. Okay? If it's early in the year, and let's say you go to the pharmacy and the pharmacy expense is $100, but you only have $50 in your HSA account. If you use your own money to pay for that qualified expense, once you have enough money in your HSA account, you can pay yourself back, again, either through the debit card or you can transfer money from your HSA account to your personal account. You'll just want to keep that receipt. So with an HSA account, the bank account, the only person you're going to have to ever show receipts to is if you get audited by the IRS. So unlike the flex spending plan where you have to very often provide copies of receipts to verify an expense, the The HSA plan does, or the HSA bank account doesn't work that way. So the only person you're accountable to is the IRS. So you'll want to make sure that any expenses that you take out of your HSA bank account, that you have a qualified medical, pharmacy, dental, or vision receipt to go along with it, and you'll want to keep those in a safe place, whether it's an envelope that's labeled HSA or some sort of a location, so that if you do ever get audited by the IRS, you've got all of your backup documentation. All right, so we talked a little bit about the web portal. This is just an example of what it looks like. Again, everybody will receive their username and password after you have enrolled into the high deductible health plan through the NRP open enrollment, but you will have access to the HSA bank account through the web address 24/7, 365. So you'll be able to go out there and monitor your account balance. You'll be able to see any transactions that have been accounted against it with either your debit card or a transfer, and you'll have full access around the clock. All right, Kevin, I'll turn it back over to you.
Thank you. So the task is the same people that we use for the FSA, so it should look somewhat familiar to you. When you look at the monthly employee cost share, you can see that there's a savings there. For an employee, your savings is $480 a year. For an employee and spouse, it's $960 a year. Employee child, it's $900 a year. And for a family, it's $1,500 a year. So when you look at what the difference is and what the insurance company charges for the plans, that's the difference. So once again, there's no incentive for NRP to push you this way or the other way. It really comes down to which plan fits you the best. Amy, if you go to the next page. So this is where it all really comes down, because we've talked about the $500 deductible plan, and we've talked about the $2,600 plan. So the question really falls in. No one ever looks at this, because when you have the conversation about a medical plan, if you're not in the industry, you always talk about the deductible. But the real question is, what's your maximum out of pocket, and how are you going to pay for that? So if we use a single, and you say, listen, I'm going to have a baby in July, I'm starting over my deductible, I know I'm going to max out on both plans, so which plan is better for me? And it doesn't matter if it's a baby, if it's a knee replacement, if you know you're planning on having a surgery. On the HSA plan, your plans start over July 1st, so July 1st to June 30th. The HSA plan is going to have a $2,600 deductible, and it's going to have a $2,600 maximum out of pocket. And if you're a single, you save $480 on that. So you're really closer to $2,100 is that deductible, because you're putting all those, if you fund it with the difference, you're putting those dollars in there tax-free. So if you have that big expense, conceptually, your maximum out of pocket on one plan, the HSA, is $2,600, and the maximum out of pocket on the current plan, which is an incredibly good benefit, is $4,000. If you have to pay the $4,000 and you're paying it with after-tax dollars, that bill's really expensive. If you're paying the HSA plan with the $2,600 and you're paying with those all with tax-free dollars and taking your savings between the two plans into account, the maximum out of pocket is less than half using the HSA than it is on the other plan. So what we find with the HSA plan, and you start digging in on this, and this is really for everyone to figure out, but typically in a family, if we have somebody who's going to max out, it's typically one person. It's typically not, you know, two people in the family or three people, just statistically speaking. We also know that 80% of the group barely uses the plan. So if you have the option saying, listen, I want to pick the plan that best fits me, I'm not going to use it, I'm a family, I'm going to take that $1,500, I'm going to put it in my account, I'm not going to fund anything else, or maybe I fund the $2,500 for what I did into the FSA, and if I don't use those dollars, they carry over. You can kind of see how the HSA plan becomes a big advantage. So let's paint the other picture that you have the $500 deductible, And right now you're getting a number of different prescriptions, and you're paying $40 for them. So your drug copayment on the $500 plan, and the drug card, in my opinion, is what kind of drives everything. So if you're going to remember one thing from this meeting, you got to look at your drug claims, because you're paying the average wholesale price less the discount for those drugs. So it's the discounted rate that you're getting through Cigna, but there's not a copayment. So when I first got my HSA plan, I ended up with this prescription that was outrageously expensive. So it's $400 a month. I go to the pharmacy the first time, and the lady looks really sad at me and says, that'll be $400. And I was paying my $40 copayment before. I'm like, wow, might have been a bad pick, glad I took the plan, but I know on the plan, so at $400 a month, clearly it's $4,800 a year, but I'm maxing out at $2,600. So, depending on what happens and all my other expenses, I could be break even, I could be fine, or if I'm only, and this is the big deal, if I'm only taking that one prescription, and I barely use the plan, and I'm going to max out at $2,600 versus $480, that was a bad election, right? Because the dollars are not working out in your favor there. So when we talk about this, we talk about really looking at what our costs are, what we've done typically. Because you may have one bad year, but if you look at it over, you know, what have I done over the last few years? Now I look at my family, so I have a wife and 3 kids. We've been lucky, but literally none of them have more than $200 in expenses. So if I fund my HSA account, I'm saving $1,500 based on your plan. I have more dollars in my savings for what I have in premiums. I put that in the account, and I really have no out-of-pocket expense because I'm using my saved dollars tax-free to, first of all, lower my income and also pay those bills tax-free, and I totally win on that deal. If I have the one claim that's really, really bad, and it's always kind of an interesting conversation piece, so I fell off a cliff snowboarding, so that was pretty bad. And by the time they were done with it, I tore my tendon, bicep, and labrum in my shoulder, and by the time we did the MRIs and the CAT scans and whatever else goes into it, that's a year I would have used a lot. So whether I maxed out at $4,000 or whether I maxed out at $2,600, I'm clearly better off with the HSA plan. So the people that I find that it really, really doesn't work for are people that are really healthy that just have a lot of prescriptions. And if you go to your pharmacy, they can pull up a list of everything you take, and they can do it for the last year, 2 years. I mean, hopefully you don't go to a different pharmacy every time you need something. If you have 2 prescriptions a year, it's probably not that big a deal, but that's really where that accounts for. And what we find with the people that are on the HSA plan, they do become better consumers because there's no office visit copayment, there's no drug card copayment. Literally all those expenses build up to your $2,600. versus building up to your $4,000 maximum out of pocket. So when you look at it, the dollars that we're really talking about here, on the $500 deductible, which is a really good plan, the first $500, not counting office visits and prescription copayments, are your expense. On the HSA, it's your first $2,600 that's your expense. It's 3 times the deductible for the $500 deductible. So it's 1 per person, 3 per family. If there's only 1 person in the family that uses it, you're only using the 1 deductible. So it's kind of in your benefit there. The HSA is $2,600 for 1 or $5,200 for the whole family.
Can you go back up to the slide before?
Hey, Amy, can you go back a couple? One more? Perfect. So you can see it's $500 per person, $1,500 a family versus $2,600. And if you look below it on the co-insurance, there's no co-insurance because it's 0 to $2,600 is the expense, and after that everything's covered at 100%. So if you had a big expense in July, basically 100% of whatever else you do for the remainder of the year is going to be covered after that $2,600. Amy, if you go one more slide. When you start looking at the plan, the $500 deductible's got a $25 copayment for a regular office visit, $50 for a specialist, $75 for an urgent care, and $250 for the emergency room. What we're saying on all those other expenses, So let's say your basic office visit's $125 and it's discounted to $60 or $70. On your core $500 plan, you're going to pay the $25 copayment. On the HSA plan, you're going to pay that discounted $60, which you'll get a bill down the line. Same's true of the specialist, same's true of the urgent care. So there's no copayments on the HSA. I'd like to just make it crystal clear because the plan's not for everyone, but if it is for you and it does work for you, it ends up to be a really, really nice way to work with it. We have a client now who, he's just sick. And over time, he knows at some point he's going to have to retire early and he's going to need money for medical and for premiums and everything else. And he maxes out every year. He pays his bills with his other dollars and he's growing dollars within an investment account tax-free to use when he needs them later. So everyone's got a plan that they go with. I would tell you the plan for a lot of people is to put a lot of dollars in there and never use them. But then you have that expense and then you have that credit card and you're like, I could just pay it for free with this credit card. So you don't have to, the question usually comes up, you don't have to fund the account. The HSA is your savings account, you have your high deductible plan. What we're talking about in these slides is your high deductible plan versus your PPO plan that we have today. So funding is up to you, it's at your own discretion, it's at your own time period. Just know every dollar in there you own, and it's not a use it or lose it. Is there any questions? So one interesting tidbit, based on how your plan year works, you can actually fund the HSA this year from July to December 31st in that full amount, and you can actually fund it next year starting in January, because your plan runs on a calendar year, on a plan year. So your start date is July or July, but based on the HSA rules, you can actually fund fully for 2016 and fully for 2017. So you get a little bump your first year. Amy, you want to finish up?
Absolutely. So there's just a couple of slides we have to go, and then we'll open all the phone lines for questions and answers. But just wanted to let everybody know that with the Task HSA account comes an investment account feature. So this will be available to everybody once you have a balance of at least $2,000. And know that you don't need to remember all of the details because all of the details will be on the website, but we did just want to make sure and let you know that it is an option for you. But again, your account balance has to be at least $2,000, and then the amount over that $2,000 is what you can use and to invest into some other sort of mutual fund. So the financial institution that you'll actually be opening an account with is Healthcare Bank, which is a bank that Task works with exclusively for HSA accounts. And so it's a bank that has been around for a very long time and has a lot of great features and offers a lot of services for the members. Really quickly, to maximize your HSA benefits, let your HSA contributions grow tax-free. So I mentioned it earlier where the HSA is a use it or save it. So unlike the flex spending plan, if you don't use the money all in 1 year, you can save it, and that's the amount in your HSA bank account continues to grow tax-free, and you can use it into the next year. So even if you were to ever leave NRP, that bank account stays with you, so it's not tied to Cigna, it's not tied to NRP, it is your bank account. The IRS says that you can't put new money into the account unless you're enrolled in another high-deductible health plan, but the money that's in there can be used for qualified medical, dental, or vision expenses. So it's definitely something that I wanted to make sure and point out that it is a use it or save it and not a use it or lose it.
Amy, there's one other area that we didn't address and maybe we forgot to slide in there, but because the HSA plan is such a consumer-driven plan where, you know, conceptually, if you look at getting an MRI at Ahuja, it's going to cost you about $4,000. And if you go up on Chagrin, which is about 2 blocks from there, you go up to Cedar, which is 1 exit from there, you're probably getting that same exam done for $800. So, you know, when you have that $2,600 deductible, you're like, well, I can either max out for the year or it's going to save me $1,800. You tend to make really, really good medical decisions as you head forward. Amy, can you talk about the Cigna website for a second where they can actually search out the cost of what things should be and ask those questions in advance?
Absolutely. So the high deductible health plan is with Cigna, and once the plan has been released from audit, so that should be right around July 1st, and we'll make sure to let Amber and the rest of the human resources team know when that audit release has been lifted, so that you know you can go out onto the mycigna.com site and you can register as a member. And then once you're out on the mycigna.com site, you can look at the cost of an MRI or a CAT scan or a PET scan at both a hospital as well as an outpatient facility. So both locations would be in network with Cigna, but one would be much less cost than an in-network hospital. So a hospital has a lot of overhead and expenses associated with it, and as Kevin said, those typically tend to be much more expensive. A real-life example I can give is my son had an MRI of his elbow because he dislocated his elbow about 1.5 years ago, and the first MRI we had done was at an open-sided facility, open-sided MRI, and the cost was $650. And I have a high-deductible health plan, just as Kevin does, and so the first $650 was my responsibility, and actually our family deductible is $6,000. So fast forward about 4 months, and we needed another MRI, but at this point we're seeing a pediatric specialist, orthopedic pediatric specialist, and this doctor says I need another MRI to see what's going on, but this time I want it done in my facility downtown at Rainbows, and so that it's read by my radiologist. And so my husband and I, we agreed that was something we needed to have done, and that MRI was $3,500 versus the $650. So just know that the cost difference is huge, it's great, and you have that ability to price out those services as well as some inpatient and outpatient surgery services through the mycigna.com site. So once that hold has been lifted from the site and the audit has been released, I'll make sure to let Amber and the rest of the HR team know so that she can get that information out to you, and everybody can then know that you can go to the mycigna.com site and register and have full access to all of those benefits and services that are out there for you. All right, just another couple slides. To enroll in the health savings account, all you need to do is elect the high deductible health plan when you enroll during open enrollment. That election information will automatically be sent to task, and you will be sent either through email or at your home address, your username and a temporary password, and then once you log into the HSA bank account for the first time, you will be asked to reset your password. All right. Again, a couple of ways to access funds through your debit card. Everybody will receive one debit card. You can order additional debit cards at no cost, and you can even do distributions or transfers online between your HSA account and your personal account. Employee education, there is a ton of information out on the TASK website, and again, those flyers, eligible and ineligible expenses will be available on the Human Resources website, so out under the open enrollment section. And I believe we are at the very end, so I am going to go ahead and open all the phone lines. And we will get everybody's phone line is open, so please feel free to.
You are no longer muted.
You have.
Yes, I was wondering, what did you say the rollover amount was on the flexible spending account?
Yep. It's $500.
$500. So if we have that amount in a flexible spending account, can that be switched over to the health savings account, or you just use the other one till it's gone?
Right. The IRS doesn't allow you to transfer that money, but you can use the flex spending money even if you enroll in the high deductible health plan, you can use the money that's in your flex spending to pay for qualified expenses, because that list of qualified expenses are the same.
Okay. All right, great. Thank you.
So it's the opposite too. If you only do HSA for a year and you put in like the maximum $6,000 but only use $2,000, but then go back to the $500 deductible plan, you have like that $4,000 that you can keep using.
Yeah. So the question is, if you go to the HSA one, you're funded heavily, and then you have dollars left over, and you go back to the $500 one, you can either save those till you get to retirement. You can use them for dental, vision, medical, whatever it may be. They're your dollars are still in that account. You just can't add to those dollars.
Did you say max out of pocket? I thought you had said at one point it was $4,000 max out of pocket for the FSA, and then you said $2,600 max out of pocket.
Oh, so let me just go through those numbers one time. So the FSA, which is the user role with 500, is $2,550 you can put in there. The HSA, depending if you're a single or family, and to forget those numbers, for a single this year, it's $3,350 that can go in, and for a family, it's $6,750. So the other numbers you're talking about, the maximum, so those are your maximum contribution amounts. The maximum out of pocket in the $500 deductible plan is $4,000 per person, $8,000 per family, and the maximum out of pocket on the HSA plan is $2,600 and $5,200 for a family. Remembering that the HSA, it doesn't have the office's copay and drug copayments. So that eats up a lot of the expense in those plans. You know, one reason we look at that $500 deductible plan, when we do the analysis on that, the majority of the group really uses a lot of prescriptions and a lot of office visits, but they're not maxing out on their plan. And the question is, are we charging you as a cost share too much for that plan when this other plan really fits you better? From the NRP side, it doesn't matter. Really pick whichever plan fits you best. But clearly, one plan or two plans does not cover the whole range of needs for this group. So that's where that falls in. So if you know you're going to max out, you know you're going to have a hip replacement, you for sure are going to pay less on the HSA plan than you are on the $500 deductible plan. Because one's a $2,600 maximum out of pocket, and one's a $4,000 maximum out of pocket. At $2,600 you can pay with tax $3, and the other one you're paying with after-tax dollars. So you just need to look at those variables. And you do have it on the Anthem site, exactly what you spent over the last 12 months, and I think you even have it over the last 24 months. So everyone also has my office phone number, and there's a whole team of people that can answer questions. So if you have specific private questions, you got our phone number on the postcard that went to everyone's house. I think we have it on some of the other materials.
And I can give it to you right now as well. It's 844-877-7125. And like Kevin said, that was on the open enrollment flyer that was your home address.
So as you start to analyze it and you talk to your spouse about it, you talk to your parents or your friends, you know, I think as you look around and you look at Amy and I that both have, and I think a lot of people that are on the call today have had it maybe prior to being an NRP. You know, I think people that have had it really like it and they become better consumers. I would also tell you that most companies do not offer a plan as good as your $500 deductible, and then maybe something where you say, listen, I've got a great benefit. Why would I change that? Because if you ask people as you talk to them, most people don't have a $500 deductible anymore. So we're really proud of both plans that we're able to offer, you know, and hopefully they meet everyone's needs. You know, we do have the last plan, which is definitely not a push for us, but it definitely fits a need with that $5,000 deductible plan.
What in the holy hell is wrong with you
They said that that mycigna.com will be released in July, but are we able to call Cigna or look on Cigna.com for estimated costs of things now?
Amy, did you hear that question?
Yes, so you can go to the Cigna.com site to look up providers, but that cost estimator tool won't be available until on or after around July 1st, once we release the audit of the plan. So again, I'll let Amber and Human Resources know as soon as possible so that we can get that information rolled out to you right away.
But if you need something sooner, you can call my office and we'll figure out how to research and get you that answer.
Another question that we had on the chat is one employee wanted to know, he said, I had an HSA with my previous employer. Is there a way that I can roll my funds over to the new HSA account? And the answer is yes. So the IRS does allow you to roll funds from one HSA bank to another. Once you open up your Task HSA bank account, you'll be able to download a rollover form right through the Task website, or you can call customer service and they can send that form to you, and then you can roll the money over so that you've got it all in one bank account. All right, any other questions?
Yes, I have one.
Sure.
If I was on the $500 plan, would I have access to the cost estimator?
Absolutely. So anybody who enrolls in one of the 3 medical plans will have access to the cost estimator tool. That comes with the Cigna medical plans, and all of the Cigna medical plans utilize the same website and the same network of physicians. So yes, you will have access to that.
Right. The plans themselves cover the same thing. So it's not like if you pick one plan or the other, certain procedures are covered and some aren't. The difference between the plan is really your cost share as an employee and some of the abilities, to pay with tax-free dollars or after-tax dollars. I would also tell you on all the plans, there's a ton of wellness that comes along with that, and there's actually really good abilities or options for stop smoking programs as well, where they provide the patch for about 6 months at no cost to the employees. So we're going to keep rolling that out. I think it was part of the initial presentation on the website. But there's really a ton that Cigna brings to the table. And one of the upgrades coming from Anthem was the wellness. I thought that's like at the end of the first show.
All right, everybody. Thank you so much for calling in, and we will make this call available, a replay of this call, so please don't hesitate to watch it or listen to it again at your convenience.